Look, I think very positive, but I would go at the assumption. Private credit is growing not just because rates are higher and therefore investors want more of it. Regulators around the world have made a decision that they want their credit provided in part by the banking system and in part by the investment marketplace. Everywhere in the world is experiencing some element of debanking as regulators ask banks to put up more capital. That logically will mean more credit is supplied by the investment marketplace, which will lead to more private credit.
Asia is said to be a decade behind that of the U.S. and Europe when it comes to private credit fundraising. For Asia, where are you seeing opportunities?
You know, it's really the same place. Asia is obviously a very big term and a very big place, and every market is unique. But every market is also the same in the following way. Most Asian markets have equity and have banks, with very little in between equity and banks. Our role in Asia, as we see it, is to supply what's missing. We are a provider of hybrid equity, a provider of private credit, a provider of long-term investment-grade credit in situations where the banks either don't want to or can't fund. Largest transaction we've done thus far has been the acquisition of the Mumbai airport, where we put up $750 million. But increasingly, you will see us fill capital markets holes that exist in Asia, and given our focus on the retirement needs, focused on the retirement systems, particularly through reinsurance.
Now, the higher cost of living is driving earnings in your annuities business. Spread-related earnings were up 36% in the last quarter. You just reported your earnings. How's Q4 looking?
I said on the call, Q4 is going to be a repeat of Q3. It will continue to be very strong. And this is both a demographic story as well as a company-specific story. Let's face it, unfortunately, we're all getting older. I know I am. I don't know about you. But we are in the world short guaranteed lifetime income everywhere in the world. We fill a part of that role. The role we fill is not perfect, but increasingly insurance has a role to play in filling the retirement system needs, not just in the US, but in Asia and elsewhere in the world. On a company-specific basis, what powers our business is investment-grade credit with yield, private credit. And we have become a very large originator of investment-grade credit with yield, which has allowed us to create spread, a portion of which is given back to the retirees, which has resulted in a very robust business, and a portion of which we retain has resulted in higher spread-related earnings. So it's been a very good story in 22, a better story in 23, but two very powerful trends.
What about private equity? There's been a slump in PE deals. Do you foresee a pickup?
I do foresee a pickup. This is a question of cycle. We went from an environment of low interest rates to an environment of, I'm going to say, normalized interest rates. Okay, prices have not yet adjusted to accommodate the financing markets. Also, if you think about the last decade, most private equity, in fact 60% of it, was not actually traditional private equity, it was growth. Growth clearly has had a much harder time with the market correction, and many firms, despite having capital, are holding on to that capital to fix problems in their portfolio that they know are going to come up when it refinances. In our business, we've spent about a third of our most recent fund. And what I would say is, if you are watching the geopolitics today, and you are watching the various calls for recession, and you are watching higher rates and the terrible financing markets, and you still like something, my guess is it's a pretty good deal. I think capital deployed in 23 will prove in the future to have very high rates of return. So I am optimistic we'll see a recovery more generally in the market.